All right, let me bring on our guest here as I'm trying to do a couple things at once. But Tim Quast, as I mentioned at the top of the show, is the founder and CEO of Market Structure Edge, joining us now for Market Structure Mondays. Let's bring Tim on here. Tim, good morning.
Good morning, guys. I'll tell you, it's tough to follow GAC and Yak. That's
You didn't
that's
like that?
gonna be hard to match.
Yeah,
good.
get us the quantitative stuff on this. The GAC.
Those could catch on.
The growth at any cost. I was always a GARP guy, growth at a reasonable
right,
price. But I'm
right.
telling you, man, it's been growth at any cost this market, and that's what's been making money is the GAC. And Joel's predicting the Yak soon, I guess.
It's when what's making money is GAC. That says a lot.
It is. This is the market. That is GAC is making the money. So is that changed today all of a sudden? Does everything change here today? I mean, we have been overbought. We have been overbought on a lot of stocks. And I got spooked on Friday, and I tweeted out I sold like 8 of my long swing trades because I was like, some of these stocks have went up like 100% in 3 weeks. I'm like, it's time to like maybe ring the register and lock in a little bit of the gains with some partial positions. On some stocks, I sold the whole thing. I mean, what are the numbers saying? What are you saying here, Tim?
Well, again, it always comes back to how you value the market, right? What's your mechanism or lens through which you look at things? Certainly, if you're looking at it fundamentally, you have to keep moving the bar, keep moving the goalposts, kind of like with the pandemic. But the the way that we see it, sentiment. And we think of sentiment as supply and demand. In fact, I want to show you NIO. Since you were talking about NIO, I'll show you, and then we'll come back to a couple of things that we can cover very quickly. But to us, supply and demand is what determines the direction of the market. And right now, on a 10-point scale of supply and demand, the market is at 5.7. And a market above 5.0 has a propensity to rise. And it doesn't have to be rational. It simply means that money is willing to pay more for things. And so long as that remains true, it will continue. But it always reminds me of Stein's law. And I mentioned this last week too. I love it because it's funny. That's Herb Stein, father of Ben Stein, from Ferris Bueller's Day Off, who said,
Bueller.
Right? anyone, one of my favorite lines.
That's an awesome movie.
So Herb Stein said, if something cannot last forever, it will stop. And it will stop at some point. We know that that's the case. So why not? Let me show you, if I can. Let me just show you NIO, since we can do this.
Yeah, let's do it.
Let's see here, and then we'll come back to the big picture. So this I think it will dovetail well with some of your comments, Dennis. But
okay.
So I'm going to look at this pure. So EV, I've got an electric vehicles portfolio here at Edge. This is Market Structure Edge, by the way, marketstructureedge.com. So if we go look at NIO, the thing that you will see is that NIO is a 9 out of 10, but the trend remains up and it's less than 50% short. The key behavior driving this stock up is machines. Well, that's okay. It tells you, though, that you're probably getting near the end. But if we look at the data visualizations here is sentiment in green, light green, and there's the price in the darker color. So long as it's above 5, it will have a propensity to rise. Here's the entry point at 1 with short volume right at trend, then short volume dipped sharply below trend. That tends to be good for price. And even though it hit 10, this tells us this stock can continue to rise, at least for a period of time. So long as it's above 5, there is more demand than supply, and it doesn't matter what the headlines are, doesn't matter what the news is, doesn't matter who's buying or selling it, it will have a propensity to rise. But at some point, it will stop, right? And we'll know when it reverts below 5.
So give us back to those numbers again, where you said NIO is a 9, and when you get to these higher levels, you said it's probably getting towards the end of it. Tell us again about these numbers, because some people are just tuning in to see you for the first time here. Tell us again about these numbers in market structure.
So market structure edge is predicated on the idea that there are behaviors that have different purposes and horizons behind price and volume, and there are rules that govern how those prices and behaviors will affect the market. And we think of that rule as regulation national market system, right? So Reg NMS big regulatory framework for how stocks trade. And it dovetails into ETFs, which I want to talk about briefly this morning because it's an important part of market structure. So we say that traders today, since 90% of the activity in the market, believe it or not, more than 90% is something other than rational thought, that your best opportunity to make money in the stock market is to understand that it's a great environment for what I would describe as medium frequency trading. The market has a propensity to wax and wane, and all stocks do it, all sectors do it, the market does it. And if you can capture the opportunities where demand is greater than supply and avoid the conditions when supply is greater than demand, you can do better in the market that we've got. Do I like the market? Probably not more than you do, Dennis, but we make the most of it, right? If we were in charge, it might function differently than it does, but given what we've got, we're going to make the most of it. And that's what Market Structure Edge is about. I appreciate that. So,
wait, Tim,
yes.
I want to ask you a question. So we just had this conversation before you came on about Kathy Wood and the massive flows into her family of funds.
Right.
Within that context, can you just talk about how like fund flows can just mess with the market? As Louis Navellier, I've just dated myself. As Louis Navellier would say, that's a great question. I don't know who that is.
So ARK has been the great ETF phenomenon. ETF standing for Exchange Traded Fund, and it's very important to understand how ETFs work. They're very complicated. We did 3 years of research to understand the mechanisms in ETFs, and I'll make this very simple. I'll take those 3 years, boil it down to about 2 minutes. You have to understand, investors and traders, that there is a wholesale market for ETFs and a retail market. That is a product of exemptive orders from the SEC that permit ETFs to function differently than pooled investments under the Investment Company Act of 1940. So ETFs are created wholesale. A party like Morgan Stanley will create them 100,000 shares at a time, off market, in a block, commission-free, tax-free. And how this happens is Morgan Stanley will gather up stocks, a basket of stocks. It could be cash. It could be a cash substitute, cash in lieu it's called. And it will be worth a certain amount, let's say $10 million. And they will give that to ARK. And ARK will say, now you can create $10 million of ETF shares to sell to the public. And Morgan Stanley will want to mark it up just a little bit. And ARK wants to earn a fee. They want to create ETF shares. By the way, in November, $90 billion of new ETF shares were created. So far this year, $5.2 trillion of ETF shares have been created and redeemed. And every time that occurs, there's an arbitrage trade. So you and I as investors buy a slip of paper effectively. It could be my pen. I could tell you my pen is worth whatever is in my wallet. And so long as you believe that, my pen is traded as if it had equal value to what's in my wallet. My wallet could be empty. It could be full of cash. That's the way ETFs work. ETFs are a substitute for underlying stocks. ARK is managing a portfolio that belongs to ARK. It does not belong to you. You cannot go to ARK and trade your ETF shares and get the underlying basket of stocks. You would if you own a mutual fund. A mutual fund is required by law as a pooled investment to be redeemable, and all ETFs are exempted from that provision. Now, that doesn't mean the market is full of danger, but it's very important to understand that ETFs are derivatives. They're substitutes that trade in place of stocks. That's why they're very elastic. So we are valuing ARK shares as though it reflected a massive investment in Tesla, which it does, but the paper doesn't. That's an important principle to understand. The second piece of the puzzle is then, where do they get their prices? If they have no intrinsic value, how is an ETF priced? It's priced on perception, and whether an ETF is above the value of the underlying basket or below it. And that mechanism encourages people to arbitrage the difference. And that works really well, so long as everything is normal. That's the essence of ETFs.
Right, and just to clarify, what you said is not necessarily a bad thing. That's why
Right.
that's why ETFs are so tax efficient. But
Right,
can you
right,
see?
right.
Do you see sometimes the process go the other way, where demand for an ETF sort of it works in reverse and it creates demand for the underlying shares?
Of course, it's very much like a currency. I think the best way to understand ETFs is to think of them as currencies. So if a currency increases in supply and the perception is that currency is valuable, pen and wallet, remember, then the presence of ETFs, this massive amount of currency, can pull all prices up. It's very much like the US dollar. When the Federal Reserve's balance sheet went from 3.8 trillion before the pandemic to 7.4 trillion currently, the presence of that extra money to offset the decline in output caused what? Well, all asset prices that are risk-based to rise. And the same thing can happen with ETFs. So the great question is, what causes that to stop working? Right? It's the greatest question of all. And the simplest answer is when perception fails. If you stop believing my pen is of the same value as whatever is in my wallet, we're in trouble. And the same thing will be true in the stock market. It happened twice. May 6, 2010, almost 78% of all volatility halted instruments were ETFs because they diverged 30% from the underlying basket. And it happened in August 24, 2015. Now, we've put some safeguards in there to improve it. I'm not saying this guy. I think the problem will be when the spreads go away. And they really narrowed last week, by the way. We've had these catastrophic spreads that I think really encouraged an arbitrage trade. And last week, they narrowed way down. So it'll be very interesting to see if the profit opportunity is there. Is a trader willing to trade a 3 basis point trade versus a 30 basis point trade? Well, it's not nearly as appealing. And keep in mind, most people don't realize the average component of the S&P 500 moves 310 basis points every day. There's a lot of volatility. And volatility is key to options too.
Tim, before we let you go, I got a little useless trivia question, but
Yeah.
I don't want you to. I think you're going to know the answer. So
Well, I don't know.
you're not included.
No, so he's not including you, Tim.
You can't be
He
in
gets
this one,
background.
okay?
Okay.
Do I get to answer?
Yeah,
You
yeah.
get to
Yeah,
answer.
you get to
Everyone
answer.
in the chat gets to
It's not
answer.
Tim.
It's a 2-part question.
Oh my
Oh,
goodness,
boy.
it's gonna take the rest of the show.
Oh no.
Not gonna be
Yeah.
good.
Okay.
2-part. I'll forget the first. At my age, I will forget the first part before you.
I have
get
a
to
goldfish
the
memory
second
too,
part.
Tim. Here, 6 seconds. So if you don't get that first part out in 6 seconds, I'm
Joel, what do you
screwed.
got? Joel,
I flushed the cache because there's not enough of it to absorb any more information.
Joel, what do you got?
Who is Herb Stein's son?
Oh man.
Herb
That's a
Stein's
tough
son.
one.
I'm going another one.
Oh, come on.
Oh man.
The chat, I'm sure, if they're looking
Is
at
he
this,
famous?
very.
Very famous son. Huh.
So you go Ben to Herb to
Wait, no,
No.
Herb to Ben. Didn't we just go over this?
No, the other way.
It was subtly in there. You're right, Spencer. It was
Okay,
there.
that's the first part. All
Didn't we just talk about this 10 minutes ago?
right, what TV show was he famous for? And what character did he play?
He was in Ferris Bueller. That's not a show. Well, it was a show, but after the movie, right?
No, it was a show afterwards.
He was in a couple shows.
I don't know.
All right.
He was the science teacher in the Wonder Years.
There you go.
Was
well
he?
done, sir.
Yep.
Yes.
All
I
right.
did not know
That's
that.
right. That's
All right.
anyone
That's
would
what-
show up
that-
again there.
I
That's
did
what
say
you get.
Ben earlier.
Right,
That's
right.
what you get.
first
You
part
did
was
say
already
Ben.
over
You
there.
snuck it in. I didn't know if people
No, we talked
will
about
catch
it. You were
it.
sleeping. You fell asleep again, Joel. You got to take your meds.
All right. Tim Quast, as I mentioned, he's the founder and CEO of Market Structure Edge. Market Structure Edge is the first decision support platform for traders built on market structure. I'll pull up the link there. Try the new way to trade for free. MarketStructureEdge.com. Tim Quast, always a pleasure, sir.
Great stuff.
Thanks for the insights. We'll talk
Thanks,
to you
Tim.
again.
Good to see you guys. Have a good week.
All right. Stay safe out there.
Thank
Love
you.
the Market Structure Monday here.